All right, let's talk about Priya. She's 24, just landed her first real job in graphic design, and she's killing it. She's got the cool glasses, the standing desk, the whole vibe. But every month she looks at her paycheck and is like, who is Fika, and why is he taking all my money? It's that classic moment of adulting where you realize your salary is more of a theoretical concept than an actual number that hits your bank account. She's trying to save up for a down payment. Maybe pay off that mountain of student debt that follows her around like a sad, expensive ghost. But it feels like she's running on a treadmill set to an incline designed by a supervillain. The system feels rigged, a game she started playing on hard mode without ever choosing the difficulty. Now, Priya's story isn't unique. It's the story of millions of young Americans. You're told to pull yourself up by your bootstraps, but what if you can't even afford the boots? The old tax code was like a dusty old instruction manual for a VCR. It was written in the 90s for a 90s economy, by people who probably still think surfing the web is a cool, futuristic phrase. It didn't account for the gig economy, for the creator economy, for the sheer soul-crushing weight of student loans that now cost more than a small car. So, while Priya sips her oat milk latte, the one her uncle tells her is the reason she can't afford a house, she's scrolling through the news. Her first thought? Great. Another way for them to take my money. It's the political equivalent of a software update that just moves all the buttons around for no reason. But what if this time it's different? What if this wasn't just another reshuffle of the same old broken deck? The headlines are screaming about a fair future bill. The politicians are swearing this one is for the Priyas of the world. So what exactly is this Fair Future Income Tax Bill 2025? Think of it less as a new set of rules and more like a massive software patch for the American economy. The old system was running on Windows 98, and we're all out here trying to stream 4K video. It just wasn't built for the modern world. The bill's main goal, at least on paper, is to simplify the tax code and shift the financial burden. It's a direct response to decades of wage stagnation, the explosion of independent contract work, and the reality that for most people under 40, the traditional career ladder has been replaced by a chaotic game of financial Jenga. The push for this bill came from a perfect storm of public pressure, think pieces, viral TikToks, and a growing consensus that the old model was actively penalizing ambition and innovation. Lawmakers finally realized they couldn't just keep slapping legislative band-aids on a system that needed open-heart surgery. The bill was born out of a desperate need to make the American dream feel less like a nostalgic fantasy and more like an achievable goal for the 21st century. At its core, the bill is built on two pillars: simplification and rebalancing. First, simplification. The architects of this bill wanted to kill the complexity that forces millions to pay for expensive software or hire accountants just to figure out what they owe. They targeted the labyrinth of deductions, credits, and loopholes that felt like a secret handshake only the wealthy knew. The idea is that you shouldn't need a PhD in finance to file your taxes. It should be straightforward, transparent, and maybe, just maybe, not the most dreaded day of the year. This is about making financial literacy accessible to everyone, not just those who can afford a specialist. The second pillar, rebalancing, is where things get spicy. Okay, let's get into the guts of this thing. What are the headline changes? First up, the standard lifestyle deduction. This is the big one. Instead of a confusing mess of itemized deductions, the new bill introduces a single, much larger standard deduction that is adjusted for your cost of living. That's right, your zip code now matters. Someone living in San Francisco or New York gets a bigger standard deduction than someone in Omaha because, duh, a sandwich costs $18 there. This immediately simplifies filing for 90% of people and acknowledges the ridiculous reality of modern living costs. Next, we have the side hustle safe harbor. Under the old rules, if you were a freelancer or had a side gig, you were hit with a self-employment tax right from your first dollar. The new bill creates a tax-free threshold of $5,000 for income earned from independent work. That means your first $5K from driving for Uber, selling pottery on Etsy, or freelance writing is completely yours, no strings attached. The third major change is the education investment credit. This is a direct shot at the student loan crisis. The new bill transforms this into a powerful tax credit. It allows you to claim a dollar-for-dollar credit for up to $4,000 of your student loan payments, both principal and interest. Finally, these changes are paid for by closing some very specific, very old corporate loopholes and slightly increasing the tax rate on capital gains for earnings over $1 million. It's a redistribution of the tax burden. The bill shifts the focus from taxing labor, your hard-earned salary, to taxing capital and simplifying the system for the average person. It's a fundamental philosophical shift in who the tax code is meant to serve, moving from a system that favored passive wealth to one that supports active work and personal investment. So, how does this play out in the real world? Let's go back to Priya, our young graphic designer. She can claim a $4,000 credit at the end of the year, which for her is like getting an extra paycheck. The new, higher standard lifestyle deduction also means more of her salary is shielded from taxes in the first place. Now let's look at Jamal, a freelance photographer and part-time barista. Before, his life was a quarterly nightmare of estimated tax payments. But with the side hustle safe harbor, his first $5,000 in photo income is now completely tax-free. This gives him the breathing room to invest in new equipment, build a website, and grow his business. And what about small business owners, like Maria, who runs a local bakery? The new bill's simplification ethos helps her immensely. When people like Priya and Jamal have more disposable income, they're more likely to spend it at local businesses. Maria's bakery isn't just a business, it's part of a community. These examples show that the bill isn't just about numbers on a tax form, it's about changing behavior and creating new possibilities. So what does this all mean for you? The immediate takeaway is this: the rules of the game have changed, and they've likely changed in your favor. This isn't the time to be passive. The Fair Future Bill is an invitation to be proactive with your finances. That side hustle safe harbor isn't just a tax break. It's a green light to finally launch that podcast, sell those custom sneakers, or start that consulting gig you've been dreaming about. Your first move should be to get educated. Don't just rely on headlines or your uncle's Facebook posts. Dive into the specifics. Use the simplified resources that are now available on the IRS website. Yeah, I know, the IRS website. But I swear it's better now. Understand how the new standard lifestyle deduction for your area works. Calculate what the education investment credit could mean for your tax bill. Knowledge is no longer just power, it's money. Second, reevaluate your financial plan. The old strategies might be obsolete. If you've been putting off aggressively paying down your student loans, the new credit completely changes that math. This is a moment to sit down, look at your income, your debts, and your goals, and redraw the map. The landscape has fundamentally shifted, and you need to adjust your route to take advantage of the new shortcuts. Ultimately, this bill is more than just a new tax code. It's a signal. It's a recognition that the American workforce has changed, and that the financial systems need to change with it. It's a bet on the creativity, hustle, and ambition of a new generation. But the bill itself can't do the work for you. It opens the doors, but you're the one who has to walk through them. So be curious. Be confident. Look at your paycheck not with dread, but with strategy. The game is still hard, but for the first time in a long time, it feels like we're all playing with a fairer set of rules. Now, it's your move.